Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Ethereum is continuing the breakout to the upside, heading towards this massive bullish price target on the larger time frames, but on the smaller time frames, the price is still flashing this new warning signal. So I'll be talking about that later in the video, alongside Bitcoin still playing out this short-term bearish divergence and trading within this sideways price range. So I'll be talking about all of that and more in just a moment, so definitely stick around. First of all, starting off on the weekly Bitcoin chart, and right now the price of Bitcoin is obviously still within this much larger bullish trend, forming significant higher lows and higher highs here on the weekly time frame. And as of right now, the price of Bitcoin is still holding above this golden pocket, which was previous resistance and is now acting as new support, sitting in between approximately 48,000 to 50,000. And so right now, technically speaking, the next Fibonacci level of resistance on the logarithmic settings on the weekly time frame is sitting at around 57 to 58k, but that Fibonacci level is not as significant as the golden pocket. And so really on the weekly time frame, the next most significant level of resistance is basically just the all-time high, sitting close to $70,000. And as always, it's important to understand that we can see short-term bearish price action during a bullish trend. For example, we can see short-term pullbacks from time to time, or just sideways consolidations during a larger bullish trend. But of course, if we see that on a smaller time frame, that does not necessarily change what's happening here on the weekly time frame. And if we're taking a look at the 3-day time frame, once again, we're now seeing a break from that extreme volatility to the upside, exactly as expected. And I continue to expect this type of price action at least over the rest of this weekend. And then potentially when the ETFs begin trading again, when the US stock market opens back up again, we could end up seeing another major move in the price of Bitcoin if we see significant moves in and out of the ETFs with inflows or outflows. And so as always, when the ETFs are actually trading, which once again is not on the weekend, but when the ETFs are trading, I'll keep you up to date on what's happening with those ETFs in real time over on my Twitter and here on the channel. So make sure you subscribe with notifications turned on so that you don't miss out on any of these important update videos. But anyway, as I've said over the last 1 week or so, even though we've seen a bit of a break from that extreme volatility to the upside, and we're no longer seeing that volatile move play out to the upside, that does not necessarily mean the end of this bullish trend. It's just right now in the short term, we're taking a bit of a break from all of that bullish price action before we could potentially continue the trend later on. And if we're taking a look at the daily time frame right now, technically, once again, the MACD has recently crossed in the bearish direction, which technically means, at least in the short term, we are picking up a little bit of bearish momentum, at least for now. And so simply based on the MACD alone, this is telling us that we're likely going to see a continued either sideways consolidation or possibly a slight pullback, basically a continued short-term cool-off from all of that bullish price action. But remember, if we're seeing a bit of a short-term cool-off here over the coming days or even over the next 1 to 2 weeks, that does not necessarily change what's happening here on the weekly time frame. And so once again, even if we see a short-term pullback or even just a sideways consolidation for a little longer, of course, we're still technically within this much larger bullish trend here on the weekly time frame. And as of right now, the daily Bitcoin RSI has finally reset out of those overbought territories. But with that being said, it's still sitting very close to overbought territories. And so ideally, it would actually be really good for the price of Bitcoin if we continue to see a little bit more choppy sideways price action or even a slight pullback, because that can help to reset the RSI further, which gives us more room to the upside later on. Because basically, if we pump right now, of course, we would pretty much immediately enter back into overbought territories here in the RSI, which means that pump to the upside, if we see it right now, might not last very long. Because typically when the RSI is overbought, it means the price is overextended in the short term and we need some time to cool off. But usually when the RSI has reset, we have a lot more room to the upside, like this base that we saw back in around the end of January. Obviously, we had a lot of room to the upside to go from there when the RSI was all the way back down here. And if we're zooming into the shorter term, looking at the 4-hour time frame, right now we're technically still seeing this short-term bearish divergence play out in the form of choppy sideways price action, which is one of the most common outcomes from a bearish divergence. But potentially over the coming days, we could end up seeing the invalidation of this bearish divergence if we start to see more of a reversal in the RSI, forming higher lows and higher highs, and especially breaking out above this descending line of resistance. But either way, at least for now, the price of Bitcoin here on the 4-hour time frame is still in this choppy sideways price range, looking relatively neutral, at least in the short term. Because as I've been saying over the last few days, the price is basically bouncing around between this support and this resistance. First of all, this line of resistance is sitting at around 52,500, and this area of support is sitting in between around 50.5k to 51k. And once again, as I've also said over the last few days, while the price of Bitcoin is still in between this area of support and this level of resistance, I'm still very neutral on the price, not really expecting anything too major, and I would only start to flip much more bullish or much more bearish again in the short term once we finally confirm a break either below this support or above this resistance. And now, if we do end up confirming a break below around 50,500 with candle closes below that level, then in that case, we could find some support at around $50,000. And below that, the next target would be sitting at around 49,000. But on the other hand, if we actually break out above 52,500 with confirmation, like candle closes above 52,500, then in that case, obviously, we'll be continuing the much larger bullish trend, and we could potentially head up towards around 57k, which is that next level of resistance based on the Fibonacci retracement tool. And if we're taking another look at that 4-hour Bitcoin chart, once again, right now, while the price is still in this choppy sideways price range, we're looking relatively neutral, but believe it or not, you can make a lot of easy profits from choppy sideways price action just like this. And if you want to know how to do that, then stick around to the end of this video to find out more. And then when we eventually break out either above resistance or below this support, once again, in that case, we could set up a short-term bearish price target or more of a bullish price target, and we can trade those moves in either direction with a long position or a short position to profit in either direction. And so we don't actually need to know the direction beforehand. We just need to know the potential entry point, basically the break to the downside or to the upside, and a possible take profit point, which is the potential price targets in either scenario. And personally, I take trades just like that in the price of Bitcoin and many other cryptos over on Bybit. So I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And also right now, there is an exclusive Apple Watch Series 9 giveaway happening over at Bitflex, but only if you use the link down below this video, because that will take you to this page right here. And so if you're trading crypto anyway, or if you're preparing to take this next trade, you might as well get set up or ready to go on one of those exchanges using those links down below this video if you want to get those extra bonuses or enter that giveaway. And if we're taking a quick look at the Bitcoin liquidation heat map, right now we're seeing a decent amount of liquidity build to the upside, which is sitting at around 52.1k to 52.3k. And so just for a short-term upside price target, that could be a potential area to watch. But as for a downside price target, if we see another short-term pullback, we would likely hit this area of liquidity, which is still sitting at around 50.4k to 50.5k. We already took out a lot of that liquidity, but there's still a decent amount left, down towards around 50,500. But anyway, getting into the Ethereum part of this video, this is on the weekly ETH to US dollar chart. And right now, the price of ETH is clearly breaking out further to the upside above that golden pocket, which I mentioned a couple of weeks ago. Because once again, this golden pocket is still sitting in between around 2,500 to 2.7k. And obviously, we've already seen a weekly candle close above the golden pocket and about to see a second weekly candle close above this golden pocket, further confirming the breakout to the upside. And so once again, as I've been saying this entire time, we're still extremely bullish on the weekly time frame, especially in terms of the trend. But obviously during a bullish trend, of course, we can see short-term pullbacks and things like that here and there. But once again, in terms of the larger trend at play, I'm still very bullish on the price of ETH. And as for a potential price target to the upside, we have a price range sitting in between this Fibonacci level of resistance and this previous high also acting as resistance. That sets up a price range in between around 3.4k to 3.5k approximately. And so once again, that is the next major price target for the price of ETH, around 3.4k to 3.5k. And once we see a confirmed breakout above around 3,500, basically above this previous high, then in that case, the next major high to target is simply the all-time high, sitting at around 4.8 to 4.9k. But once again, before we can start targeting the all-time high, we still have that last major obstacle at around 3.4 to 3.5k. And remember, even if we see a short-term pullback on smaller timeframes, we are still technically within this much larger bullish trend, especially while we're still above the golden pocket. And if we're taking a look at the daily time frame, of course, right now the price of ETH is continuing this move to the upside. But with that being said, over the last 1 week or so, we have definitely slowed down at least a little bit from all of that crazy bullish price action that we saw a couple of weeks ago. And this has also been shown here in the daily Ethereum MACD with a slight loss in bullish momentum. But with that being said, it has not confirmed any bearish cross, unlike the Bitcoin MACD. And also keep in mind, the daily Ethereum RSI is still currently overbought. And typically when the RSI is overbought, that means we have somewhat limited room to the upside. Of course, it's still possible we could go a little bit higher, but essentially we have a lot more room to the upside. We can go a lot higher if the RSI has reset back down towards more neutral levels. And so that's why it's also healthy to see these sideways consolidations or even some short-term pullbacks here and there during a bullish trend, because that helps to reset the RSI and reset these price oscillators, giving us much more room to the upside later on. And if we're taking a look at the 8-hour time frame, of course, right now we did have this previous short-term bearish divergence, which played out over around half a week or so, mostly in the form of choppy sideways price action, which is one of the most common outcomes from a bearish divergence. But right now, with the price making a new higher high in the 8-hour candle closes, technically this now invalidates this old bearish divergence, but we could still potentially be forming a new bearish divergence here on the 8-hour time frame. Because right now, even though the price has made a new higher high in the candle closes, of course, at least for now, the RSI is still forming lower highs. And so the only way to get rid of any chance of a new bearish divergence forming here on the 8-hour time frame is if we see a breakout in the RSI above this previous high, because of course, if we have higher highs in the RSI and higher highs in the price, there's no divergence. But at least for now, this possible new bearish divergence is not yet confirmed, because we have not yet actually cemented the lower high in place in the RSI, because we basically need to see some sort of lower high put in place with a quick turnaround in the RSI, something like that, in order to actually confirm the bearish divergence. Because if we do not confirm this lower high in place in the RSI, and if the price basically continues printing green candles, then that can drag the RSI further to the upside. And of course, once again, if we have higher highs in the RSI, there's no divergence. And so what we need to see to confirm this potential new bearish divergence is some sort of 8-hour candle close in the red, and ideally 2 8-hour candle closes confirming in the red, in order to actually confirm this new bearish divergence here on the 8-hour time frame. And even if this new bearish divergence actually confirms, once again, if we're looking at the outcome of the last bearish divergence that played out in the form of around half a week of choppy sideways price action, which once again is one of the most common outcomes from a bearish divergence. And so we could simply just see something similar play out if we confirm that new bearish divergence before potentially continuing the bullish trend higher later on. Because remember, as I said earlier, ultimately, no matter what happens in the short term here, at least while the price is well above this golden pocket on the weekly time frame, we're still extremely bullish in terms of the larger trend at play. And if we're taking a quick look at the price of Solana on the 8-hour time frame, obviously over the last 2 days or so, we did end up seeing that bounce from this 50% retracement level sitting at around $99 to $100, which is acting as support. And as I've said over the last 3 days now, I've been taking a decent amount of profits off the table right around $99 to $100 for my short-term short position on the price of Solana. And in case you're new to this channel, just to quickly catch you up on what's happening here, once again, I entered a short position right at this break to the downside as we set up this bearish price target at around $94 for this bearish head and shoulders pattern. But considering the fact that the price commonly bounced at important levels of support, and considering we did have that important level of support at around $99 to $100, once again, due to that reason, I took a significant amount of profits off the table for that short position. And so at this stage, like I said in my last video as well, a lot of that short position is already now closed, and I do have some of that short position still remaining open in case we continue further to the downside towards this price target. But in the worst case scenario, if we invalidate this break to the downside by breaking back above this golden pocket, basically breaking back out above around $105 to $107, then in that case, of course, I would close that short position altogether, because in that case, it would be invalidating the bearish scenario. But once again, because the majority of my short position is already now closed in profits, even in that worst case scenario, this is still a profitable trade. So congrats if you took this trade. And in case you were also wondering, my Ethereum long position is still open from all the way back down here, which I actually mentioned here on the channel publicly as soon as I opened that long position. And so once again, I am still holding that Ethereum long position with no exact price target or take profit in mind. But as the price continues further to the upside, I'm simply slowly moving my stop loss further into profits. And so by doing that, I am not capping my upside potential, because as the price moves further to the upside, I continue to profit from that long position. But when we eventually see some sort of significant pullback, of course, that will just trigger my stop loss and exit me out of the trade automatically in massive profits. And once again, if you want to take trades just like that for Ethereum or Solana or any other crypto, check out those links down below this video if you want to get those extra bonuses. And if you want to actually know how to take those trades in the price of any crypto, no matter if we're bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from long positions or short positions if the price is bullish or bearish, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.